Most people woke up this morning, opened their trading apps, and assumed they were looking at a normal market pullback. Red candles, a little volatility, nothing they haven't seen before. But what's actually happening right now is far more serious and far more dangerous. This is not a correction. This is a trap. Specifically, a carefully engineered $90 silver trap designed to push you into making the exact wrong decision at the exact worst moment. While mainstream financial media keeps repeating the same tired talking points, stay calm, markets are healthy, this is normal volatility, the real plumbing of the global financial system is breaking down behind the scenes. One event alone should have stopped everyone in their tracks. The CME going offline. You're told it's a technical issue, a server problem, routine maintenance. That explanation does not survive even basic scrutiny. History shows us something very clear. Whenever insiders lose control of price discovery, exchanges don't malfunction, they go dark. Pulling the plug is the fastest way to stop a digital bank run and prevent panic from spreading. Behind the scenes, silver prices are not calming down. They are exploding. And the world's largest bullion banks are scrambling to contain a situation that is rapidly slipping beyond their control. You, meanwhile, are being encouraged to stay in paper positions, to trust digital numbers on a screen, to believe that what you see is real. At the very same time, global elites are doing the opposite. They are aggressively sourcing every available ounce of physical silver they can find, trying to close short positions before the market officially breaks and exposes the lie. This is where the $90 trap comes in. Psychologically, $90 is being used as a ceiling, a mental barrier. The goal is to convince you that silver has already topped, that the rally is finished, and that the smart move is to sell into fear. But this fear is manufactured. Those red candles you see on your screen do not reflect the physical market. They are generated inside dark pools and derivative markets, where retail investors are completely blind to what's actually happening. You're not allowed to see the real volume of physical silver leaving Western vaults. And that's the point. The CME going offline is the smoking gun. It signals that the physical silver shortage has reached a level where the digital illusion can no longer mask reality. Vaults in London and New York are being drained. Not slowly, not gradually, but aggressively. We are now watching a complete and irreversible disconnect between paper silver and physical silver. As February begins, the so-called global financial reset is entering its most volatile phase yet. Leaks and internal communications suggest that the shutdown was not accidental. It was a deliberate move to buy time. Time for emergency liquidity operations meant to protect banks sitting on hundreds of billions of dollars in unrealized losses. For these institutions, a sustained $90 silver price is not painful. It is lethal. Their balance sheets are already stretched to the edge of insolvency. Rising silver prices expose the naked short positions they've relied on for decades to suppress price and maintain confidence in fiat currency. They need metal, and the only place left to get it is from you. That is why the trap exists. Retail panic is not a side effect. It is the objective. While everyday investors are shaken out of physical holdings, insiders are quietly positioning themselves into hard assets that exist outside the digital banking grid. Meanwhile, China has executed one of the most effective arbitrage strategies in modern financial history. By bidding 10 to 15% higher for physical silver in Shanghai, they have systematically drained Western exchanges of liquidity. This has left institutions like COMEX facing a delivery problem they cannot solve with paper. What remains is a dollar backed, not by metal, but by debt, leverage, and promises that require constant belief to survive. This is not market competition. This is financial warfare. Whenever a system goes dark, it is never for your benefit. It is always to protect the institutions that have spent decades extracting purchasing power from your labor through inflation, debt expansion, and monetary manipulation. The media wants you to believe silver is just another commodity, like oil or corn. That is a lie. Silver is a strategic material. Every solar panel, every electric vehicle, every advanced weapons system, Every modern communications device depends on it. Its disappearance is not just a market signal. It is an industrial warning. The $90 trap represents the final attempt to claw back physical silver from public hands before the world accelerates into a fully digital financial system, one where access to money is programmable, permission-based, and easily restricted. Once that transition is complete, opting out becomes nearly impossible. The vaults are empty. The warning signs are everywhere. And the system desperately needs you focused on paper while the exit doors quietly close. Unrealized banking losses are not just numbers on a spreadsheet. They represent a collapse of confidence, one that becomes very real the moment people realize their deposits are being used as exit liquidity. Emergency measures once dismissed as conspiracy, bank holidays, withdrawal limits, forced settlements, are now openly discussed behind closed doors. This is economic chess, and the objective is clear: reduce private ownership, increase dependency, and lock wealth inside systems you do not control. When markets go dark, they rarely return the same. The physical silver shortage is the truth the financial establishment fears most, because it marks the point where control ends. When you hold physical metal, you hold something outside algorithms, freezes, and policy shifts. You hold history. You hold optionality. Every fiat currency ever created has eventually returned to its intrinsic value of zero. The dollar is not immune to this law of history. The $90 level is not just a price target. It is a pressure point, and pressure points eventually fail. Tomorrow does not bring a return to normal. It brings the beginning of a new financial reality, one where tangible assets matter again. You can believe comforting narratives, or you can look at the data. The choice still exists for now, because once panic replaces denial, there will be no calm exit, only reactions. Physical silver and gold are not speculation. They are insurance against a system that is openly showing stress fractures. This is the final phase where information still provides an advantage. Stay informed. Stay grounded in physical reality, because once the lights go out, only what you truly own will matter.